weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up, and this is for Friday, April 26, 2019. I have been out of the office the past 2 days. As you get older, and I've got plenty of gray hair, you got to be careful. Parents get older, and sometimes they get ill. I've had that situation happen to the point of the hospitalization and so on. That's where I've been. That doesn't mean I'm not putting out my morning updates. I am. Doesn't mean I haven't put out my morning subscriber videos. I get up 5 in the morning, 5:30. I've read everything. I'm recording right after 6 in the morning. That's Central Daylight Time, and putting out my updates for my subscribers. I'm not running into the office to do these free videos right now, but that doesn't mean that I'm sorry for not having done so. I am. When we look at the stock market as to what's going on, you're back to all-time highs. You can see that the metals have gotten a bounce today, but the important thing is if you watch the metals video, you got down to lower Bollinger Bands and you found support. You're still in trouble in the euro. You're down to 112, and there's no sign as to them, and I'm being them being the European Central Bank, having done anything to stem the tide of this. The amazing thing is that the dollar, even with its high numbers, hasn't yet come home to say that U.S. corporations are having problems, other than if you looked at today's GDP data, you saw inventory build. And a lot of the growth that went on last quarter was inventory growth. That is not what makes the future good going forward. Keep that in the back of your mind. In terms of the energy market, while the supplies of energy via what we've just done with Iran is certainly an important situation, did we get high enough in the price zone where, in other words, people don't want to pay up that at this point in time? That's a question that we'll try to answer. As you look first, and that's how we do the weekend edition, we first look at a monthly chart, one monthly chart. You've gone from this low that you made in the month of December on a closing basis, and you've come roaring back 600 plus points. By any stretch of the imagination, I don't know anyone that thought you were going to go in a vertical price rise all the way up like that from Christmas Eve. The rally has just continued straight on a weekly basis. You've stayed over the 18-week average now since the beginning of the year, and you haven't looked back. In fact, you've never come back to challenge that number. And just on a closing basis, you haven't even backed off very much where you get lower highs, lower lows in any manner. You're just higher lows, higher highs. When we look at this chart, we had talked about the possibility of this zone right here being a shoulder, this one, and this being a head. It's called an inverted head and shoulder, which could lead from the low of this to the high of this as a count. And that could be from basically 2940 to 2360, let's just call it 600 points, carrying the market. You add that to this 34 to a 3,500 count in the S&P. I'm not saying it's going there. I'm saying as a technician, it's a count. When I look at something else, my swing line indicator, what a swing line does is it looks back to decide, is this current pattern going to be drawn to the high or the low of a week? It looks to see if you have a higher high week, a lower low week, an inside week, an outside week up, an outside week down. And via that, all that, it decides where the indicator line is going to go. And the reason I devised it is I don't want to be guessing. I want quantitative analysis here that tells me, hey, based on these numbers, this is what you've got. And basis that study, I've got higher lows, higher highs. That's bullish, and it stays that way under the current chart pattern unless you come all the way back down and take out 2789.50. That's quite a ways off from here. In terms of moving averages, the market has stayed over the 18-week average, which is over the 100-week average, and those two averages are over the 200. It's a bullish setup on the weekly charts. Notice that during Christmas, you came down, challenged the 200-week, and you haven't looked back since that occurred. And once you got over the 18-week, you just accelerated. Yes, you've had a small correction in there, and you've managed to move up again. In terms of the Bollinger Bands, which is an algorithm, that's the lower band and the upper band, designed to keep a market trading within it 95% of the time. You stepped out of the lower band in December, got right back into it, and haven't really hit an upper Bollinger Band since the end of last summer is the time to look at it. Could we still be running towards it? No reason why not. If you were to take out 2789.50, maybe then you'd make a run to the wherever the support of the 18-week moving average is. But barring that, you still have momentum up. You have the trend up, the bias up because you're over the 18-week average. In the NASDAQ, still the same thing. Higher lows, higher highs. Momentum locked in, the bias up. To break this pattern, you'd have to get back under 72.76. Now, something did happen here, and I want to show it. This is an outside week down. I have a theory that I espouse during my regular updates for you, that if you take out the high of an outside day down, an outside month down, an outside week down, within 2 time frames, in other words, the next day or 2 days later, on a weekly chart the next week or 2 weeks later, the first goal is the upper Bollinger Band, but you've laid a bear trap because those that are short there get caught. And that's what happened here. And this market went right to that upper Bollinger Band, which was the first objective. There was no moving average over it. That was the objective. Here's your 200-week average, 118. And the market has just kept running on that since then. So that was the catalyst, at least on this chart, that I think caught the market. On the Dow Jones, you've got a pattern of higher lows, higher highs. I can't tell you how many stocks within the Dow have had terrible news, and yet the market has shrugged it off, stayed over the 18-week average since December, and just moved up. Now, it, like the other averages, haven't been able, and I'm talking indices actually, haven't gotten up to the upper Bollinger Band either since late summer of last year. In the Russell, this is called catch-up. The small caps have stayed over the 18-week average, but they never caught up with everything. Well, suddenly you've got higher lows, higher highs in the market. Now, if we come back and look at this, last week's low here was 1558.20. We took it out and took out the high. What you don't want to see is this market take out this week's low this coming week or the week after. If so, it's the flip-flop. It's a bull trap. And then the closest moving average, which is in this case the 18-week, could become an objective of that market. In the VIX, the market has climbed back to the 100-week average for resistance, that 1439 level. The 18-week average is 1587. The trend is still lower, lower highs, lower lows. The momentum is still locked in bearish in the market, but as I've mentioned to you before, taking a market from the 1100 level and trying to push it down to the number 8, for example, it's very hard. But taking it from 11 and trying to kick it up to 13, 14, 15, it's a lot easier. And the reason is, if you go back and you look at these numbers, you can see what last year you were pushing sideways action, and it was hard to get under those numbers. In the 10-year note, you're still in a bullish configuration. You've got higher lows, higher highs. That's my definition of that. You're over the 18-week average, and the 18-week average last week was fighting, and it got over the 100-week, the 122.08 level. In theory, my theory at least, that's a bullish crossover the market should try to push up. And it did that this week. That doesn't mean it can't go higher, because resistance is back at the upper Bollinger Band. Whether it's a weekly, monthly, daily chart, I still believe that the market will pay attention to the theory that only 5% of the time will the market stay under or over Bollinger Bands. And the first challenge of them is often, not always, often a spot that the pros take some money off the table. That's what I teach. It's what I believe. Does it have to happen that exact moment? No, but it's in there. It doesn't mean that it can't touch it and just kiss back. You'll see enough examples of that yourself. But it depends if you're going sideways or if you're coming out of a market that's already running like this market did in a trend, and you can see what's going on. I always use the 18-week average or 18-day or 18-month, depending on the chart, to define what bias is. In TLT, we've got the higher lows, higher high, still in an uptrend. Momentum had been pointing down. It's flattening out here. The market did not have the strength on the downside to break into the 18-week or 100. It might. You break this trend to the upside if you get under 122.11, and that was last week's low. Right now you've got higher lows, higher highs, still very much an uptrend, and momentum, as I said, is no longer pointing down. It's not correcting. In the dollar index, the first challenge of the upper Bollinger Band was met, I almost fell over my own cord, was met with some resistance right here, right at that upper Bollinger Band. And momentum is up, trend is up. Will the market be able to continue, or is it going to back off a little, will be the question. I teach not to buy over or sell under Bollinger Bands. In the eurocurrency, first challenge of the lower Bollinger Band since way back here in March. The trend is down. The bias is down. I, again, don't teach to sell under lower Bollinger Bands. I think pros took some money off the table, but they're not bullish. This is a bearish pattern still, as it is still a bullish pattern in the dollar index. There's just a question where some money comes off the table. In the British pound, you reaffirmed a downtrend. Lower highs, lower lows, the first close back under the 18-week average with momentum going down. You'd have to take out the 132.45 level to break this pattern. You could negate the bias if you closed over 130.26, but that's also an area I'd expect to see the pros selling short against that 18-week average. In the Canadian dollar, the pattern is lower highs, lower lows. That's a downtrend. The bias down since you closed under the 18-week average, momentum pointing down. On weekly charts, I don't look to see if momentum's getting overbought or oversold, just the direction, if any, that it's pointing. I would look for resistance here on rallies into the 18-week average, and you break the downtrend if you take out, in my opinion, 75.44.5, because you'd no longer have lower highs, lower lows. You'd have at that point a lower low and a higher high. So that's where I think the bears defend themselves. In the Japanese yen, you have a pattern of a lower low and a higher high. To me, that is not a trend. The market has also got, as I'll call it, confusion. You've got the short-term average, the 18-week over the 100, and yet prices have remained under both for about 4 or 5 weeks. I don't see this market doing an awful lot one way or the other. In Bitcoin, the market had gotten out of this sideways action right here up and over the upper Bollinger Band. Now, the theory of Bollinger Bands is 5% of the time the market will trade outside of the band. But another part of it that I've learned is the longer you go sideways, the bigger you can get going eventually in a direction. Now, I count each consecutive week that you're over a Bollinger Band as taking away one of the percentage points of that 5%. In addition, I look to see if there's follow-through. You had some follow-through. That's 2 weeks over. You, on this week, finished up, and this was the week of April 18th at 52.95, still over the upper Bollinger Band. Now you're getting your correction back within it. So you had 3 weeks in a row giving a 2% chance coming into this week, as I counted, of staying over that band. Now you're back under it. If you take out this 49.45, you break the bullish pattern also of higher lows, higher highs. It would still have upside bias as you're over the 18-week average, but it would be a problem for the bulls as I see it. In Brent, one of the things that I teach is that it's not uncommon when you look at the 18-week average for it to determine bias. It can also be a neutral point on a chart. Well, if you look at where these markets and how they move, I'll give you an example. Here you went way up, you pulled back into that zone. That's all that you did. So the market breaks down. Well, now if it eventually rallies up, that could be the zone of resistance this 18-week, and that's about what it's doing. You've also broken a pattern here of lower lows on a closing basis, lower highs. So the market negated the downtrend, but on just a pure closing basis, you don't have higher low closes, higher high closes. Pretty neutral right there. When I come to the Brent, you know what I'm going to tell you. The first challenge of a Bollinger Band, be it to the upside or downside, is where I think pros often take some money off the table, just like they did here, possibly here. Does that mean they're catching every penny? That's not what I'm saying. It's where I think the first resistance shows up or the first support shows up. And that's what I think showed. I think bigger supports back in the $65 range. As we come to WTI, same thing. You got up, and if you look, you got in right about here is where you started hitting the upper Bollinger Band. You got to 63.34. That number was 63.08 on a close. So you got up to 63.34. You didn't hit the upper band. You finally did it here. Yeah, they left some money on the table, but not a lot. That's my point. Momentum, if it starts down under 80, be careful. You can get more of a break in this. Take out 62.99 on this weekly chart. You break the pattern of higher lows, higher highs as well. Gasoline, the market has been a powerhouse since December. It hasn't really backed off. You did have a couple of weeks over the upper Bollinger Band, but as I teach, you often pull back in. This week was an important week. Right here, the week of March 29th. Why? Because you had an outside week down. Now, what I don't know and how to teach it, because I don't know it, if you take out that high, you're already over the Bollinger Band. And that's what the market did. And when it did it, it caught these people on the run, and that's where you went there. And now the question is, what next? Momentum up, trend up, still a bull market. Heating oil market, lower lows, and then you started the higher high and have an outside week down now. Unless you take out today's, I said it wrong, this week's high, I'm used to the daily charts, I'd look for support back in this range if it gets down there of 195.75 to 195.20, the combination of the 18-week and 100. I'm also looking to see, do we get a jump where this, when we reopen Sunday night, where the 18-week gets over the 100-week? That also would be a supportive sign in this market. So you put it all together, it's pretty much where you're at. You know, even though I had to be out not putting out my daily videos for you at the end of the day, I was putting out my morning subscriber videos because regardless of what I do, I get up early in the morning, and this is what these charts look like. I typically get up 5:30. I'm reading, and by the 6:30 zone when I start recording, I'm already read up as to what the day's events were overnight, be it Asia and Europe. So you sit down, have a cup of coffee, and let's assume you're looking for an idea in the market. Well, each and every morning I cover as best as I can in this exact sequence of markets 40 to 45 charts, trying to cover the futures and ETFs as best as I can. There's more studies on these. And the rationale here is I know I buy advisory services. My guess is you're looking for somebody, not necessarily a broker for you, that is saying, this is what I'm seeing in the market. If you're watching my videos every day, think of the logic. Why are you watching them unless you think I'm a guy that knows something about what I'm saying? That doesn't mean I'm right, the markets. It means you're looking for a chart analysis, and that's what this is all about. Giving you the chart action, what I think the pros are doing on a daily basis. I only do these on a daily basis. Technical and fundamentals early in the morning, what I see going on, what can impact the market that day. And unlike these generic videos where I can tell you what I think the pros are doing here or there, the bias, I'm putting out specific trade ideas. Day trade, sometimes option ideas, throw out different things for you, ETF ideas. They'll be right there in it. Now, I'm not going to do this for free, but I'm also not a gouger. And if you know anything about me and the history of me in this industry, that's pretty much my reputation. So, the morning subscriber video. First 30 days, $7.95 total. It's about 26 and a half cents a day. If you like it from there, you can move on and take it every 30 days for $15. You can buy a one-year subscription for $13 a month, which is $156. You can quit. There's no contract. You decide if it's worth it. But I say that if you give it a try at 26 cents a day, not a bad little deal, right? How do you get to it? Go to our website, www.iraepstein.com. Under either research or education, go to morning subscription. It explains it all, and you sign up there. By the way, included in this is our free mobile application that is normally a $40 a month vehicle. It's included, and when I put out the notification that the subscription is ready for you to view, you will get a flash right on it. You just hit that, and it will open up on your iPhone or your Android phone, and it'll play. Pretty neat, all included in this. What can I tell you? I'm Ira Epstein. Sorry that I wasn't here every day, and I may run into that problem in the end of the day this week as well. Don't know yet. Thanks for your well wishes. I know a lot of you have called in or written me. You have a great weekend.